Let's go over to yesterday, and we'll look at today also. Yesterday, if you look at it, we have a trend filter. What we call a dual trend filter. When it's red, we look to buy. When it's green, we look to sell only. So let's look at yesterday, the 11th, and the day before. Going into the day before yesterday, we were red out in a chop market, got into trend. Then we were in chop and got into a big, strong bias move up yesterday. Before the news posted yesterday, I said the market was looking to buy only. We were to buy only dips, retracements all day until it turns red, which we got this morning, which I'll go over today's setup also. The dual trend filter is very, very important because it keeps us on the right side of the market. The market can only do two things. It can go vertical or it can chop. Don't make it any more difficult than that. A chop market is categorized when our dual trend filter does not match up. When it is red-green or green-red and it does not match up like this. Here's our outer zone is red, but our Rinko inner dots are green. When it doesn't match up, that's a chop market. That's a chop market. But then once it turns green, it turned green right before news posted. I said on the microphone, we are turning green. We should start looking for a possible move to the upside. Let's see if news can confirm it. It was correct. The algorithm picked it up right before news actually posted, just like it picked it up today with the news posted. We'll go over that setup in a second. We turn green. So what do? When it's green, meaning my dual trend filter is green, we're now out of a chop market. The trend is up. Bias is up. No shorts all day from 8:30 all the way to the close. There wasn't one short opportunity during the day according to our algorithm. It said to buy retracements only buy retracements. Then we turned into a chop market. It went green-red here at this level. Yesterday at 1600, 4 o'clock. And now we've been red. So this morning before the news posted, we turned red. So we had a great short opportunity. I'll show you how you can do that. We're looking for a V-top. I'll get this over here in 1 second. We're looking for a V-top also. One thing you have to realize, after a V-bottom, we're looking for V-bottoms when we're green, or V-tops when we're red on these yellow triggers. After the third, we talk about this all the time, over and over again. After the third momentum trade, buy stops are starting to get hit. These highs are being broken. Buy stops. All these counter trend traders are getting wiped out of the market all day yesterday, trying to sell these pivot levels, trying to sell these Fibonacci levels, trying to look for moving average crossover, looking for divergence, what have you. All these buy stops keep getting hit all the way up. So the market goes parabolic, or what's called climax buying, after a third Momo hits. It happened over here in the sell side. We broke this low. These yellow triggers start firing. It was the third Momo. It went parabolic to the downside. So the trend bias keeps you on the side of the market, what we're looking at. Yesterday with the CPI, our PPI and the CPI on both days, today and yesterday, the CPI, our PPI and the CPI, we were in a chop market. Trend filter did not agree. Green, red. As soon as it turned green, it started rolling. We got our first V bottom up here. Market cranked even more, 88 all the way to 03. It got cranked another 14 S&P points to the upside. So this keeps you on the side of the market, right? This dual trend filter is very, very important. Our outer edge, meaning these outer zones, like we always talk about, it's been back tested for over 30 years of testing on the ES. It's the best zone we came up with to reverse price. So if this price ever breaks, if this zone ever breaks, there's a trend change in the market, and you go from a chop market into a trend market the other direction. Now, if you look at today, what is our bias? Minutes before the news, right here at 8:30, I got on at 8:20, 8:28. The market was in a retracement, and all counter trend traders are pumping up the market. And I said, we're looking for a V-top. Why did I say that? A V-top because we are red.
I don't know.
My outer zone is red. Outer zone is red. Red. Right?
Right.
Zone is red. That's our what we tested for the past 30 years.
Okay, we don't know when it's
the
going to
best
come,
zone of reverse price. Our inner zone, our inner dots, which are our Sim Rinko dots that we developed, That is red also. So it's red, red. So what do we look for? No buys. It's a short bias. We're out of the chop market because the chop market was green, red here, and then it turned red, red yesterday and all the way through since midnight. It's been red, red, only shorts. There's our VTOP that happened right after news broke. VTOP happens. That is an entry. There's your VTOP entry. That's our first trade of the morning. Now we have a liquidity grab that happens between the VTOP. So this is a VTOP. We look for VTOPs and downtrends, V bottoms and uptrends. Just like yesterday, we look for V bottoms. This is a VTOP. The yellow triggered fire. Now the yellow trigger must fire within 3 Rinko bars of this hammer that happens. This little doji, it shows like a little hammer. The best is if it happens right on the hammer, or if it happens right within close to the hammer as possible, meaning here's the hammer, the count starts right on the hammer, the 0 is a hammer, there's 1, 2, 3 Rinkos. It must fire a yellow trigger within 3 candles. It fired on the second candle, 1, 2, that's a valid VTOP. Your entry today was 60.81 3/4, and it got as low as 60.71. It fell 10 S&P points. All right, in a matter of about 6 minutes, 6.5 minutes, just like yesterday. Yesterday was the opposite. Yesterday, looking for a V bottom. The entry was on the second candle. That's a valid trade setup. Now, that's one of our setups: V tops, V bottoms, V tops in. If dual trend filters in downtrend, we don't have many setups in the room. It happens on a daily basis. All markets are the same. So we have a V top in a downtrend and a V bottom in an uptrend. Very simple to understand, not hard. Market can only do 2 things. Vertical, go sideways, and chop. This is chop. Our dual trend filter does not agree. Green, red. It gives you a big heads up that when it goes red, red, start looking for shorts only. So right now we're short bias. Then we get our VTOP. After the VTOP, I have what's called a liquidity grab. A liquidity grab happens between our momentum, between our VTOP and our Momo 1. Here's our Momo 1. Momos happen after a VTOP comes in. And my next yellow trigger is called a Momo. It's called a momentum setup. There's Momo 1. In between Momo 1, that just tells you that the market's in a momentum downtrend. Momo 1, Momo 2, Momo 3, Momo 4, etc. In between Momo 1 and Momo and the VTOP, after the VTOP, we have what's called, we're looking for liquidity grabs. You'll see traders talk about it. This is where we have an algorithm that we programmed. The algorithm, here's the VTOP that came in this morning on the algorithm. VTOP came in here. You can turn on this strategy by double-clicking under NinjaTrader, turn on the strategy, and let it do the entry for you. Let it perform the stop for you, right? The entry, the stop, and the exits. All right, the algorithm will get long on the first liquidity grab. First liquidity grab happened at 49 seconds after the news. If some of you guys want to wait until the news develops even more, 3 minutes to 5 minutes, I tell manual traders, the strategy will get you in at this level. But I never like to hold the strategy right into news because news can go up or down. You want to turn it on after news. A lot of traders wait about 3 minutes, a couple minutes. Some do it right after. Up to you how you want to do it. You just don't want to have the strategy. You want to turn it off about 3 minutes to the news occurs, and then you must let the news post first before you turn the strategy back on. Then you turn the strategy on, and this was a liquidity grab. You could have got this liquidity grab with the strategy if you turn it on later. And this is liquidity grab there also on your LG. So these were liquidity grabs. So liquidity grab is this. It's a distortion in price where the market, these algorithms will retrace price. They'll retrace price to get the counters out of the market to gain liquidity to drive the market in the same direction as trend. So this distortion in price tells us that they are selling order blocks above the market, above where the market is currently, to retrace They retraced the market to sell where it was, to retrace and get better fills, because if you're a bank, hedge fund, prop firm, larger institutional trader, you just don't go ahead and sell 500 contracts, 300 contracts at the market. They don't do that. They like to scale in on, and they like to push the market back against the overall trend direction. They like to grab liquidity, add contracts, scale in a direction of the push. So if you look at yesterday, what they were doing on all those liquidity grabs yesterday, so all day yesterday, what they were doing after 8:30, they grabbed liquidity here, took all the counters out, grabbed liquidity, took all the counters out, grabbed liquidity. This is where the counters are saying, hey, this is I'm trying to sell the high. I'm trying to sell Fibonacci here. I'm trying to sell pivot level, you know, and R1 and R2 and R3. There's divergence. My moving averages are crossing over. The MAC crossed over. Some baloney indicators telling me that I want to fade the market. Well, the counters got wiped out yesterday. If you had one sell on your trade blotter yesterday, if you had one sell, one short yesterday on your trade blotter, just one, you were against the market, because the market was grabbing liquidity all the way up. The smart money was grabbing liquidity all the way up yesterday. And it wasn't just from 8:30. It was all day, grabbing liquidity all the way higher. And that happened all the way into the close. We had a dual trend filter that said no shorts yesterday. None. Zero. All the way up. It was an all-day liquidity grab trades all day yesterday. So that was all-day liquidity buying yesterday. Now, into the close, we did have the trend filter that turned back the other way. We had liquidity grab shorts, liquidity grab shorts. Now we're in a downtrend. Now we're looking for sells only. So what are we going to do? We're looking for a V-top here. It's forming a V-top right now. Once it closes, it's going to give me a yellow trigger on my other chart. Once it closes red, we're looking for the first distortion in price like this, meaning above the previous high, getting above it, grabbing liquidity, and let him close it back. I want to close, let it close red for continuation. We're looking for a continuation to the downside. You can see it right here on my chart. It's forming right now, she's forming a V-top. It's in a retracement right now. So here was the V-top I said to look for before the news came out. The algorithm picked it up. It was red. There's your V-top. Your first liquidity grab will come in between the V-top and the Momo. It comes in here. So this is when you're going to look for your best liquidity grab short. This is called LG1 or liquidity grab 1. You can enter it manually on liquidity grab on a pullback, the V-top manually, Momo manually, or you can use a strategy. You can turn on our strategy that comes with the software that gets you in automatically on this V. After the V-top, it will fire you in on the first liquidity grab. Now we have two strategies that traders have a disposal of. One for liquidity grabs. One, LG1, it will take only the first liquidity grab after a trend change only. All right, then we have another one that you can use a strategy that you guys have in your hands right now. LG2, it will take all liquidity grabs after a trend change. Okay, so now what you can do, how's that important? If you were taking liquidity grabs yesterday to the upside and only did with my dual trend filter, look at all these wins. If you took all these liquidity grabs, look at all these wins. Liquidity grab, liquidity grab, liquidity grab, liquidity grab. They were all to the upside with trend. We ignore these pullbacks, right? If you have your trend filter on, because the dual trend filter said green, green. So you want to match that up. It was just one after the other. Just a beautiful day of trading to the upside. Then all of a sudden, we switch gears The dual trend filter went into chop. It turned red, red. Got that big short into the close at 1600. That's when it got into the close and had a heck of a short of 10 points into the close. Now we're red, red. Right here, right before news posted, I said look for a V top. We're looking for shorts only. No buys. Keep it simple. Get your mind right. Get your mind right. Get with the smart money. Smart money shorting the market, not buying the market. They're taking the counters out of the market. They're taking all these counters out of the market again this morning. All these counters trying to buy these lows have been getting wiped out. So every time you see a distortion in price, think one thing. Counters just got wiped out of the market. They're trying to fade the market. This, I call this trying to catch the falling knife. And then counters that kept trying to sell that market yesterday all day, they're jumping in front of a runaway train. They keep getting run over, run over, run over, run over, run over. So we do things a little bit different. We like to short lower, cover lower. Not buy low, sell high, and sell low, buy low. That's impossible in the market for anybody to do. I don't know anybody, I've never met anybody that can do that. You know, we can't outthink the market. We can't outguess the market. The market's designed for us to lose, period. What we can do is we can go with what the market's telling us by order flow. Order flow says we are going down. Trend is down. Trend is down. Dual trend filter says we're down. It lets us get away from trading chop markets. That's where traders tend to fail. They do great in trend and they get killed in chop. Well, our dual trend filter alleviates that issue for us because it gets us on the right side of the market in trend market. So now what we'll do is we'll look for a V top again right here coming up. Get this over here out of the way. We'll look for a V top. You can see it forming right now. Forming over here. We'll look for a V top, a yellow trigger to form. The liquidity grab trader, what it will do, it's turned on right now. What it'll do, it'll wait for this V top to close right here, just like it did over here. It will look for the first distortion in price. This distortion in price is called one thing, guys. It's called a stop hunt. It's called stop hunting. Stop hunting. It's very, very simple. The market's not hard to figure out. You're going to go vertical or you're going to be in chop. That's it. So what we have to do is let the algorithm find out when we're going in vertical markets. Let it be green, green to buy, red, red to sell. And don't overthink it. That's it. And then we want the market to come in with a V top, V bottom to give us the turning point in the market to confirm we're rolling over in the direction of trend. And you can look for the first liquidity grab where it's a stop hunt. This is a stop hunt this morning. The smart money came in and got the stop hunt right at 60.81 3/4. Right here. The market got drilled this morning all the way down to 71 for 10 points. So all these buyers in the market that tried to fade the market got wiped out. And you can see where the counter trend traders got wiped out because of this distortion in price or these sell blocks, order blocks. Because you see, this is where the market spiked and went right back down and closed back red. So this is where the counters got wiped out again. We want to take advantage of that. We want to take advantage of that order flow, and we want to let it close back red in the direction of our dual trend filter. Dual trend filter is red, red this morning. We're only looking to short. Now, we will change gears if and only if we go back into a chop market. That will not happen until you close outside of our outer zones that was tested for the last 30 years as being the best zone of reverse price. So if we start closing outside by 2 candles outside this outer zone right here, outside of exactly 60.84 3/4, I know the exact breaking point in the market. Exact breaking point would be 60.84 3/4. If I close outside of 60.84 3/4 by more than 2 candles, this trend filter will turn green. These dots will turn green. It will be against my red, red outer zone, or these dots down here will turn green, I'm sorry. It'll be against my red zone. Once these inner dots turn green, it's against my red, red trend filter. We go into chop then. Chop says what? Stand aside. You can take my failure trade, which I teach you how to guys to do, but if you only want to trade trend, you just wait for it to turn green, green, look for V-tops, take the first liquidity grab. Don't make it any more difficult that with this algorithm. It's very simple. It's very powerful because it picks up the trend and the chop for you, and then we know when to get in the first liquidity grab for the run. You know, that's how we do it. That's the only setups we need to look at on a day-to-day basis. We don't need to look and change our setups on a year-to-year, year after year after year. We don't have to adjust our setups to the market. We don't have to do it because the market, it only does two things. It goes vertical or it chops. That's it. Typically during a trading week, you will trend 3, chop 2, or you'll chop 3, trend 2. This will pick it up. I don't care if we're in a chop market. I don't care if we're in a trend market. The algorithm will pick it up with the dual trend filter. Then what we do, we simply look for V tops, V bottoms. After the V top, V bottom with trend, we look for the first liquidity grab and try to get involved in the trend. We try to sell low, buy lower. Buy high, sell higher. Why? Because what the smart money does, it knows it picks on the counter trend traders. As soon as we are green, these buy stops are above these highs. And these counters keep selling these highs and the buy stops keep hitting. Or they have unlimited risk. When you short the market, you have unlimited risk. These algorithms have to cover that are wrong. These counter trend trade algorithms have to cover. The novice traders got to cover. The novice traders that are counter trend trading the market. The counter trend traders got to cover their position. What does that do? It's a self-generating trade. It drives price. Price is higher. It goes higher. When it's going low, it's the same thing. Sell stops are below these lows. So what they'll do, once they break a low and you turn red, it starts driving the price lower. Why? Because all these counters, they're trying to buy the low and they keep getting hit for sell stops, self-generating trade. You'll see the market go. Now what we do, we have this oscillator below to let you know when there's extreme selling. If my oscillator is pegged at negative 123.81, if it's pegged, you'll see it right on top of the red line. It's extreme selling. If it's pegged to the upside, it's extreme buying. Extreme buying. If I'm green and my oscillator right here is pegged, that's extreme buying. Don't make this difficult. 8:30.04 until 10:14. Extreme buying. The market's going parabolic because it's pegged. It's over top my red oscillator. Traders use oscillators so wrong so many times because what they do is they try to think, oh my goodness, it's oversold. It's got to go up. No, the market's preying on you. All these indicators at TradeStation, Ninja Trader, Thinkorswim, Strategy Runner, they give you for a reason. They're typically against the market trend, especially oscillators. Oscillators can knock you out of the market on a consistent basis over and over again because you're constantly counter trend trading the market. We use the oscillator different. We want it to be oversold because guess what? We're not trying to buy oversold markets. We're trying to short oversold markets. We're trying to buy overbought markets. Totally counterintuitive what you're taught. Why? Because the market's designed for you to lose, period. That's it. You got to be on the right side. You got to get your mind right. That's how you get your mind right. When we come in, we look at this, we see the algorithm says red, fine, red, I'm going with the market. I'm looking for a V-top. V-top comes in, I'm looking for the first liquidity grab because that's a distortion in price. That's a stop hunt. That's it. They're trying to sell order blocks. I'm going to jump in with the liquidity grab, first liquidity grab I see. There it is. Market gets marked down by over 10 points. Now what are they trying to do? They're trying to mark the market higher. But do we take these trades here to the upside? No. We don't take this counter push to the upside. It's still red. We're waiting for this to close back red. Close red, just like it did over here. This will be a V-top coming up with trend. And then if you don't want the V-top, you missed that one, you can look for the first liquidity grab, distortion, stop hunt, and price, and try to get the crank down to the downside.